Now I will show trading view. Okay. Is my screen visible?
Yes, sir.
Yes, sir.
Yes. So you have to open trading view. It will show like this. Okay. I'll show on some other website. Just a minute. On on other browser. I have already logged in here. I'll use some other browser. Okay, is this visible? Black screen, trading view.
Yes, sir.
Yes, sir.
Yes. Okay, just 1 minute. Let me log in from my desktop as well so that I will be able to understand what is going on the chart.
Prashant, I'm not able to go to this screen. This is the main screen, is it? I think I have logged in already. So,
This is the main screen, and
okay.
here we can see there is sign in.
Okay. Okay.
We don't need to go to that screen once we are logged in.
Sir, one small question. For this
Yes,
course, can means we'll be able to analyze using the basic version of TradingView, or we need subscription?
basic version is fine.
Okay.
I think I have shared some other link. Just a minute. Many people are not able to join, so we are getting some delay, and this was expected. That's why I have kept this session so that on from the 1st September it should run smoothly. Okay, so what I'm doing is I'm making small video on my desktop. To show how to log in. Okay, so please stay for, it will take just 4 or 5 minutes. I'll finish it soon. Okay, just a minute.
राम की तो प्रभात से पढ़कर इस लैंड में लेंगे आगे।
Okay, after this, I think we get the link in mail, right? Okay. Fine. So let me go ahead. Yes. So what I will do is I will mute everyone, and after explaining, when I want to ask if you have any question at that time, I will allow you to unmute. Okay. I'm muting everyone. You will not be able to unmute. You can raise your hand and then I will allow you to unmute. So this is our TradingView platform. If we type www.tradingview.com, this will open. This is login here. You can log in here, sign in, click on sign in. You'll get this page. So you can log in with Google or you can use email ID. And it is very simple process to log in. I think I have not registered here. This is my registered mail ID and it requires two-factor authentication if we have done it. So this way you can log in and this page will appear. From here, go to products and click on supercharts. When we click on supercharts, chart will open. Okay. I'll remove everything from the chart. And this is simple chart without anything. Okay. This is the chart, how it appears. And when I ask for TradingView ID, you have to click here, or if you bring your cursor here on left side, let me highlight. Is green highlighter visible? It's not visible. Okay. So when we bring our cursor here on left side, we can see logged in as, and that is the TradingView ID. We can click here and go to profile. When we go to profile, this is our TradingView ID. So just copy that and send it. Okay, so this is one thing. Then when we go to charts, just a minute. So this is a chart. When we want to add indicator, how we can do? Click here on indicators, and then you'll be able to see that in invite only. Otherwise, what you can do, you can click here, super advanced TRT updated, and if it is added for you, you will be able to see here. In this, you'll be able to see the indicator you can add from here. Okay. So this way you will be able to add it to your chart. Okay, does anyone have any question in this? Is this clear now? Yes. So I have allowed unmute. If you have any question, you can ask.
So sorry,
Sir,
how
there
did
were
you
so
reach
many
here to that super trading?
Can you ask your question again?
How did you reach here from indicators? I am not getting that ticker tape tool.
Okay. Can you share your screen? Are you on your laptop?
Yeah, yeah.
So I will allow share. Just a minute. Okay. So you can share your screen now. Fine. So here you're not getting that. Just a minute. I will share the exact name of indicator. I will share that name in Zoom link. I have shared it on group also. And here it is. You can copy this name, Super Advanced TRT updated for demo, and paste it there.
No, I can't get it.
Okay, now click on your photo on left side. Okay, click on your profile. Pawan. Okay, you have not shared your TradingView ID, I think.
Okay.
Manage, add user. What is your TradingView ID? Just show it again.
I'll paste it.
No, it's okay. Okay, now you have access. Go to chart again.
So this is a indicator which you created for your followers, is it?
Yes. See, there is invite only now. Go to invite only. On your screen, you can see invite only.
Last.
In the
last.
indicators, you have clicked. Come down, bring your arrow down. Yes, there is invite only.
Okay.
Yes. Yes. Just click once, remove it. Don't click so many times. Just one click is okay. It is already added on your chart. Don't click so many times. Close this. Close the indicator. Yeah. Can you see that it is already on your chart. Don't do
Okay.
anything. Close this. Click on stock screener, left side. Come down, slightly down. Down, 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 right, right, right. Yes. See, click on that. Okay. Now go up. There are two indicators added. Remove one because both of them are same. Okay. Now make it a candle chart. Go up, go up. Besides indicator, left side of indicator, click there. Click use candles. Yes. This is how it will look. Okay.
Okay. So we will learn what these things means. Change, continuation.
Yes, yes, yes.
Okay.
Okay.
So I can see this for any stock I want.
Yes, yes.
Okay.
But this will not work on all time frames for all stocks.
What time frame does this work on?
It works on different time frames for different stocks. For Bank Nifty, it works almost on all time frames. But for Nifty, it works on higher time frames like daily and 75-minute charts and weekly charts.
Okay. And this is meant to be that way by you. I mean, you had coded this.
No, no, no.
Mhm.
See, markets are different, market participants are different. And what is this? This is my understanding that prices will behave in this manner. Okay. So let me share my screen. You can stop sharing your screen. So this is a chart, right? Now we are going to discuss what is the logic behind this and how to interpret this. But my understanding is this, that if candles are green, they will continue to go upside. If candles are red, they will continue to go downside. Because there are some manipulators, they will keep selling when candle color goes red and they will keep buying when candle color becomes green. So this is my understanding and this is the way some manipulators work. There are different kind of trends. So Wyckoff has described different type of trends. Dow has described different type of trends, higher high, higher low. Then there are different people who have uh, what you call that Elliott wave pattern and all those things. So there are 1000 more than 1000 ways of trading in the market, but everything does not work for every stock. And if you see those people who are very successful, what do? They trade in limited number of stocks. They don't go for all 10,000 stocks or 7,000 stocks available in the markets. If you read some books, you will be amazed to see that there were cotton kings, there were steel kings, there were railway kings who made huge amount of money only in that sector, because that specific sector or those specific stocks move in that particular way. So this is one particular way in which stocks move, but we have to understand which stocks are moving in that way. So with this indicator, it will be really easy to identify which stocks are following this and which stocks are not following this. So the stocks which are moving in this manner, we can trade those stocks using this indicator. And there are chances that sometimes it will work, sometimes it will not work. Therefore, there is a stop loss. Stop loss is basically to take us out of those trades which are not working in our direction, and we should not lose large amount of money, or we should not lose lot of time, because time is also important. Suppose we have bought somewhere here and book profit here, then prices came down again, there is green signal if we buy here. So what is happening in this? We are saving this much of time. This is 84 days, means almost 3 months. So we are saving 3 months of time, and we are able to buy again at lower prices, which is just 2% lower. So price difference is not significant, but in that 3 months, if we deploy same capital in some other stock, we'll be able to make good amount of profit. For example, from here, if we see, this is around 84 days, 85 days. So suppose we exit and take same entry in some other stock, we are saving 2% here and we are making 24% from this to this. This move of 85 days has given 24% up move. And we are saving this 3 month and investing amount in some other stock, which will give us at least slightly higher return. When we exit this, it is actually giving us 19% in around 110 days. So instead of losing 2%, making 10% is also better, right? This way we can compound. So for
Sir, I have a
mentorship bridge,
question.
yes, Monica.
Okay, so how to if I can see in my this, I can see 1 day, 5 day, 1 month, 3 month in the at the bottom. So
Okay.
how to convert it to a weekly chart? You said we can do weekly, so can you just
See,
show me?
are you able to see this? 1, 3, 5,
Yeah,
15.
yeah,
Click
but I
here.
am not able to see
See, do you see
in
this
my
down arrow? Time interval.
yeah.
After this, there is
Yeah.
this down arrow. You can click on that, and
One
we have
second.
these options.
Okay. Huh.
So
So
you
in
can
that, where
select
to
any
click?
option. And if you
Huh.
see, there is star mark. I have star marked 1, 3, 5, 15. If I add 25, this has appeared here. If I
Okay.
unselect this, it disappears.
So what this suggests?
So we can add this here, and then see, there is weekly chart. If I click on 1 week,
Huh.
this chart will get converted
Acha.
to weekly chart. Okay.
Okay.
And
So
if you are
if I
using your laptop, then
hmm.
just click on the screen and press any number. If you press the number, it will show this change interval. This is for 5 minutes. I press just 5 and this appeared. If I press 1, this will appear. I can make it 10 minute, 15 minute, anything. And if you want to make it hourly chart, just click H. If you want to make it weekly, just press W. But first you have to press any number. Only then you can remove that and press W. This way you can make the chart weekly. If I press D, then stock symbols will start appearing. So don't press any letter, press a number first, then change it to D, W or M.
Okay.
D is daily, H is hourly,
Hmm.
M is monthly.
Okay.
So this way you can use that.
Dr. Prashant,
Okay. 1 week.
Yes,
Dr. Prashant, I have two questions here.
yes.
If I can see this chart, like it is showing us the support and resistance level. Am I right?
Don't interpret anything right now.
Okay. And the
We are going
second
to
is
discuss
this.
what these zones are showing.
Okay. And second is this this super advanced TRT parameter
Yes.
will be available for how many days we can see this like on our charts?
So right now it
It's
will
given
be
to us.
available for 7 days and after 1st September it will not be available. First we'll go through the course and according to the packages selected, I have given you choices. For those who have registered for pre-launch, they have different choice also available. So I had given those choices. You can go through the description or go through the PDF file for course and see for how much duration it will be available for you. Accordingly, whenever you want, I will start the access and you can start using it. For now,
Okay.
it is available till 31st of August.
Okay.
Yes. And there is a question, is the access given for this TRT? So, Dr. Prashant, I have not given it to our mentorship group because I am making some modifications in it. So, I will change the main code. You have access to one code, you can use that. There is not a big difference. There are some changes here which I am going to describe. So, even if I give it to you, it is not available, means it is not, you will not be able to make out any difference in that. I have made this one change where I can show you if the trend is mature or not and what is going on. So you can use that feature later on. I'll explain everything gradually over 2 sessions. How to use this tool, what are different kind of trade and how to take those trades. So one setup is buy when it comes down and exit when it reaches the swing high. So that kind of trade we'll discuss. We have some setups which we are going to discuss using this tool. So don't worry about it. And I hope this is clear how to add this to your chart. Is there any question related to this? Further questions?
I'm not getting this 1 month, 3 month, 1 minute, 3 minute, 5 minute, this kind of options.
So you have to click here,
Okay.
time interval, and then you'll be able to see this here.
No, I'm not able to go there. Okay.
Share your screen again. Now there is D written, right?
Hmm.
Click on that. All the
Yeah.
choices are available. Bring your cursor down. 1, 3, 5, 15. Everything is available.
Okay.
Now you can
Acha, okay.
yes. You can star mark it. The time frame which you want to use, you can star mark and those time frames will appear there.
Okay, got it. Thanks.
Yes. Okay.
And when you say this this chart or tool will not work for all, I mean, do you mean to say that the chart will come, but it may not give you good results, or the
Yes,
chart
yes, yes.
itself will not
Exactly.
work?
Chart will appear, but it will not show good results.
I mean, the results cannot be interpreted properly because it's not perfect. It's not following that pattern.
Yes, yes.
Understood.
So there will be different type of manipulators on different time frames. There will be some scalpers on 1 on 3, 5 minute time frame. There will be swing traders active on daily chart, weekly chart, and higher time frame traders will be more powerful traders. So that way, if they are not using this kind of method, then it will not work on that time frame.
When you say manipulators, what exactly do you mean? I mean, these are people who are trying to manipulate the market. I mean, is that what you meant?
Yes, stocks are always manipulated. there will be buyers who will look for prices to go higher, and there will be some sellers who want prices to come down. Unless the prices go up, they will not have benefit in buying. And when people have huge amount of money, what will they do? Suppose Warren Buffett wants to make money and he is trying to buy some stock. He will buy it as long as the prices are in lower buying zones. He will sell if prices go up, and he will keep buying at lower levels till the time he has adequate quantities in his kitty. Suppose he wants to invest, for example, $10 million, and the stock is trading at his buying level. He will keep buying as much as possible at that level. If it goes up, he will stop buying. He will not buy again. Again, when it comes down, he will start buying, and he will do something to avoid other people from buying. So as much as possible, he will not want other people to buy simultaneously with him when he is just accumulating. He will not let the news come out that he is buying this stock. Once he has completed his buying, he has invested all the amount which he wanted to invest. Then what he will do? He will want prices to go higher because he has invested his full quota. Then he will want the prices to go higher. Then he will spread the news that I have bought this, and he will buy in large quantities also suddenly, so that there will be sudden spike in the volume, sudden increase in the prices. People will know that somebody is buying this in huge quantities. After that, what will happen? Buying spree will start. Everyone will start buying. People will come to know that there are some strong people buying this. There is a breakout, and breakout traders will come join the hands. They will start buying. So this way, prices start moving higher. There is profit only when after or buying prices go higher, and strong people can manipulate these things. They can spread the news with media and all those things. Like George Soros, he is investor in that hedge fund, Hindenburg. So what do? They first short the stocks, then they spread the news, like Adani News. First they shorted. I will share my screen and I will explain it on my chart. Okay. So is this chart visible?
Yeah.
Yeah. I think around 24, 25 January, the Hindenburg report came, right?
Yeah.
In 2023. Now, if we see here, the chart was all green. Prices were moving higher. Then all of a sudden, what happened? From top, there is this big candle. It has turned black and it has hit the stop loss of buyers. Then it turned red. It changed the trend to down. Then it went up slightly. Again, it started moving down. So there are some strong people who are already selling the stock. And we could have exited. If you have bought, you could have exited here in this red candle or in this black candle. These are exit levels, or at the most, when prices went back, you could have exited. In second change also, second continuation also, you could have exited. And these exits were much before the report came. And there is shorting opportunity also because the trend had changed to downtrend. So if Hindenburg has given this report, why did they give this report? I suppose they are the people who are shorting here. And then they came out with a report, and market for Adani NT fell down.
So when it first turned red, the shorting had already happened. Is that what you're saying?
Yes, what I'm saying is people are selling here. They are selling aggressively. They have started shorting here. Therefore, candle has become red instead of staying green.
No,
They have
people
sold, they have,
meaning the people who are here in this case Hindenburg only, or there are some people acting in concert.
yeah. So there may be multiple institutes. A single institute may not be manipulated that much, or it may be possible for them to manipulate single-handedly if they have very huge funds. It depends. But manipulator is not one entity. What Wyckoff says is there is composite operator, and that operator is not a single person. there are different kind of people, maybe 10 institutes who are involved at same time.
But the report actually will come much later. So they've already shorted by that time.
Yes.
So this tool helps you to identify some things which are shorted, but there is no report or some outside news yet.
So it is technical analysis which tells us beforehand that
Okay.
this kind of things are happening.
Okay.
Okay. So here we can see I have added volume and there are 3 red candles on in these 3 red candles. There is high volume selling has been done. Then there is increase in prices, but volume is slightly more, but candles are not increasing in while going up. All these principles we have discussed during our Wyckofian course. So there is visible selling, hidden selling, everything is going on after this. Prices went in selling area. You can see if I zoom it, this selling area is printed in this red candle. If I show it to you, this area is not visible till now. As soon as red candle forms, this selling area appears. Price went in that selling area. You can see we are going to discuss this setup, and then after that prices came down significantly. So this is what we are going to discuss, when to sell on retracement or when to buy on retracement. Buy on dips is one method which people like a lot. If suppose prices fell down here and people started buying on dips, they would get stuck because they will buy here, they will try to buy here, feeling that prices are going higher. And from 3000, it came down up to 1000. Every time this does not happen. This happens very rarely, or during the bear markets, this happens very frequently to many stocks. So if we keep buying on dip, this is first dip. How much is the fall? Let us see. From top, it fell down by 13%. So people feel, अरे 10% गिर गया, चलो खरीद लेते हैं. After that, from 10%, it came down again. It went down by 20%, 30% here. So 20-30%, चलो खरीद लेते हैं. And from here, it went down further up to 75% fall. So if somebody has invested with futures, the account will be blown in just few days. And if somebody has done covered call, buy future here, sell call here, the account will be blown within less than a month. And it will not be possible to roll over. So there are many things which we'll discuss, but this is how we are going to discuss about the tool. Now I will explain some orders. Okay, how to place orders.
Prashant, one second. I have a question
Yes,
regarding the
yes,
chart. Yeah, so if we go at the bottom, it's written 1 day, 1 minute interval, 5 days in 5 minutes interval.
yes.
So what is then suppose if I click 5 days.
So if we
So
click one day, it is showing a chart of one day.
yeah. So that interval is what like?
So this chart will show 5 days chart. If we 5 days means starting from this candle to end of this candle, it is duration of 5 days.
Right. And the interval in 1 minute interval, then this in 5 days it's 5 minutes interval. So 5 minutes interval is what? Like
So each candle is 5-minute candle. If we see here, I will show you. This candle has started at 15:20. Next candle started at 15:25. So each candle is of 5-minute duration.
okay, so every 5 minutes the changes what is happening it will show, right?
Yes, yes, yes. It is showing high,
Okay.
low, open, close for every 5 minutes.
Acha,
Let me
okay.
show you this. When we go to events, add sessions break. And now if I go to 1 month. So this is the chart of 1 month. We can see different sessions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So there are total 23 days in this 1 month. And for this, they have selected 30-minute time frame. to show it
Hmm.
properly. If I select
Hmm.
5-day, it will show 5-minute chart. So this is showing
Okay.
5-minute chart. Every candle formed is of 5-minute duration, whereas here every candle formed is of 30-minute duration. Now, if we bring your cursor here, this is 9:15, next is 9:45, next is 10:15. So it is starting after every 30 minutes. Only last candle will be of 15 minutes here because market ends at 13:30, 3:30, 15:30. So it is starting at 15:15 but ending at 15:30. Otherwise, every other candle is of 30 minutes duration. We can select from here, we can go to 15-minute time and the candle will be 15 minutes. It will start at 9:15, end at 9:30. Next candle starts at 9:30, ends at 9:45. Again 9:45 to 10. This way, when we select this, it is duration of one candle. When we select this, it is duration of the candles on chart. Means total 6 months data is visible on the chart right now. If we select year till date, so from the beginning of 1st January till now, it is showing YTD. If we select 1 year, then it is from for last 1 year, from August till August. See, this is first date is 23rd August till 23rd August. So this is for complete 1 year. Then we can see 5 year, we can see all. So right from the beginning till now, it has shown everything. Right?
Okay. Yeah. Right. Thank you.
So, Prashant, can you kindly explain the colors once again? Because I think
We
you
are
had-
going to describe that from next session.
Okay.
Yes. Okay, so should we check some order types?
Yes.
Is the screen visible?
Yes, sir.
So I'm showing this Zerodha chart because many people use Zerodha account. Now here we can see there are multiple watch lists at bottom. Well, if you want to add some stock names here, what you can do, I'll select this as empty watch list. Add instrument is written here. So click on this add instrument and list will appear here. Okay. So you from this list you can add anything or else delete this. And if you want to add Reliance, so type Reliance, it will show multiple names: Reliance Infra, Reliance Religare, Reliable, Reliance. So I mostly select NSE stocks. We can see Reliance. I want to add this. I'll click on plus. It is added to the chart. If I want to add Reliance Future, I can add from here. If I want to add call and put, I can add from here. Now suppose you want to go to option chain of Reliance, and you want to see different types of options available. You can use this and just see the name in the manner which it appears here. Reliance AUG. It will show August future, August calls, puts, everything. If you remove this and select instead of August, go to September, it will show for next month also. So this way you can add it to your watch list. Okay. Now once you have added this to your watch list and you want to buy, what we can do? We can go here. There is buy choice, sell choice. Then this is market depth. Market depth means it shows bids and offers. Bids means people who are willing to buy, they will offer, they will bid. Reliance is trading at 2999.95, means 3000 rupees. If I want to buy, I will click here, press buy. I will enter quantity here and I will press price 29.90. Suppose I want to buy at 29.90 and I place buy order what will happen? Market is closed now, so it will not take the order. But if I click on buy, my order will be placed and it will be visible here if it is in this quantity, in this range. So if Reliance is trading at 2999.95, in offer we'll be able to see 3000 rupees, 5 paise, 10 paise, 15 paise, 20 paise. Because Reliance is highly liquid, there will be bid at every 5 paise, there will be offer at every 5 paise. So those stocks which are highly liquid, they will have good bid. Means spread between bid and offer will not be huge. It will be very small. Mostly 5-10 paise spread will be visible. So bids will be available at 2999.90 and offer for sale will be at 3000 rupees. That means there is not much of difference between bid and offer. And order quantity will be visible here. Orders and quantity. Orders means suppose there are 10 people who are willing to buy, then there will be 10 orders at this level. And if these people have entered 100 quantity per person, then there will be quantity of 1000. This is for simplification of understanding, but there will be people who are willing to buy 1 stock, 10 stocks, 15 stocks, 5 stocks, any random number can be entered. So 10 orders, but there can be 103 quantity. That is possible. So for offer also there will be same thing. There will be offer. There will be people who are willing to sell. The quantity orders will be seen in number of people. There will be 10 people, 15 people, 100 people, and there will be a quantity. And number of quantity will be visible, but will not know which person is selling how many quantities. So it will show combined offer, and there will be 5 orders visible here. But we can increase it to 20 in Zerodha. So of market depth can be increased to 20. I don't usually see this market depth unless I want to see how much is the liquidity for small caps and mid caps. For Nifty 50 stocks, liquidity is not a problem. We should see this for options definitely, because if you want to trade in options and they are not liquid, then it will be bad thing to do. Means if options are not liquid and if you want to place buy order or sell order, it may not get executed at your desired level. If the price is at 26 and people are not available to sell or buy, you will have to sell it at maybe 20 rupees or 24 rupees also, depending on stock to stock. So this is how we can check bid and spread. Is there any confusion in this?
So Prashant, so if we place a order, that will be seen in bid, and offer is the sellers who want to sell their shares, right?
Yes,
To
yes, yes,
company.
yes. Now
So
here,
then we should place the order seeing the offer.
that can be done if you want to execute your order. You want to exit from, suppose you have bought Reliance at 3000 rupees or whatever level. Suppose you have bought at some level below 2500 maybe, and you want to sell immediately at market. There is a possibility of selling at market, or else you want to sell at whatever is the closest price. So what you can do, you can check bids. Because you are selling, you should not look at sell, you should look at bids. What is the nearest buyer available, and place your offer at that level. That will get executed immediately. Or else you can keep your order slightly below also, and that will get executed immediately. If you place your offer higher than these offers, then your offer will take time to get executed. Okay.
Okay, so for buying also, then we have to check that at what price the buyers can buy, and
Yes.
accordingly we should
So
put a price.
yes. So there are different buy
Okay.
and sell orders. I will show it here. If we click on this B, it will appear like this. We can convert this to sell also, and it will appear like this. So we can just toggle between buy and sell, and here we can see what is the order we are placing, whether it is buy or a sell. We can take both things, and there are few things which is a quick order, whether it is intraday or not, quantity, price. So this is quick order. Then we can go to regular, cover, aftermarket order, iceberg order. I don't know what is this iceberg order. This has been introduced recently. I think I don't use Zerodha too much, but what we usually do is this. We can place regular order. In regular, we can use either BSE or NSE. What is the difference between these two? Sometimes BSE may have lower prices or higher prices. So accordingly, we can select NSE has slightly more liquidity. So I mostly execute orders with NSE. Then in regular, we have intraday and long term. Intraday means if we want to exit on same day, then this will be intraday order. There is no difference between the amount we pay, margin required is almost same, but for intraday there is slightly less margin requirement for in cash stocks, not in FNO. Means if we go for futures, if we buy future, margin required is 1.33 for intraday as well as for overnight, but for stocks it is slightly less. So when we are trading in stocks on intraday charts, then margin required is just 600 per stock instead of 3000 rupees. So there is some leverage in intraday trading, but we have to exit this trade on same day. Okay. So if we buy on intraday, then if we don't sell this by end of the day, broker will square off this order at around 310 or 320 as per their criteria. Then there is this long term. If we are investing or if you are taking this for few days or few months, then you have to select this long term, and you can this will be delivered to your account after that. If you are taking intraday order, it will not be delivered. It will be squared off on same day. Okay. Then there are these orders. This is market, limit, stop loss, and stop loss market. What are these things? Let me explain. This first one is market order. In market order, we don't need to enter the price. We just have to enter quantity. Suppose I want to buy 100 quantity. We'll start from 1. Suppose I want to buy 1 quantity and I place market order. At which level will this order get executed? Will it get executed at 29.99.95 or lower than this or higher than this? If this is the price of last traded stock, last traded price LTP, then at which level will our market order get executed? Can anyone tell?
At market price.
At market price means at 29.99.95.
Yeah.
Okay. And suppose we want to buy 1000 quantity, at which price will it get executed? It will get executed at 29.99.95.
So then,
Repeat.
if suppose 100 orders are available at the market price, it will get executed at that. Then the next price, the 900 orders would be placed.
Yes, exactly. So even if we place one order, suppose we are placing one stock buy order and it is not a liquid stock and it is trading at 3000, but next seller is available at 3050, for example, then if we place market order, it will get executed at 3050 rupees. Okay.
Yeah.
So this is if the stock is not liquid enough, then this will happen. If the stock is liquid, then whatever is the offer price available here, it will get executed at that price. Now there is some lag. What is that lag? When we are looking
Hello.
at these prices here, the price may be showing 29.99.95, but actual traded price at stock market may be different. Yeah. So the exchange is in Delhi, NSE is in Delhi, and BSE is in Bombay. What will happen if we place market order, even though we are looking at 3000 rupees here, it is possible that within fraction of seconds, some orders may have already been placed and this stock is already trading at 3002 rupees or 3003 rupees. For high liquidity stocks, it usually does not happen, but for other stocks, it may happen. And when there is some sudden event, some sudden news, then we may be able to see different price here and actual traded price will be different. because there will be some time lag from here. When we place buy, click on the buy, it will go through internet to NSE till Delhi. It will take some time, and you can appreciate this when you are speaking with your friend who is sitting in Delhi. They will see the prices earlier, and you will get these prices slightly late. When I talk to my friend is sitting in Raipur, and he is able to see prices slightly earlier than me. So this happens. Therefore, market order will not get executed exactly at that level. There will be some slippage. Okay. This is one thing because of time lag. Then another thing is because of availability of sellers. We are buying, suppose we want to buy 1000 shares. We place 1000 share buy immediately at market level. There are people who are willing to sell at 3001 rupee. 100 quantity is available at 3001 rupee, 20 paise, 120 quantity is available. 3002 rupees, 800 quantities available. So our orders will get executed in that manner. First 100 quantity, then 120, then remaining quantity will get executed at this level. And prices of stock will also move simultaneously. They will go up simultaneously. So this happens when we take real trades. Now this is market order for buying. If we are using same order for selling, and we see that it is trading at 2999, but if we push this order, then prices may fall down and our execution may get complete at 2998, 2997, 2995. So gradually it will come down, and we'll see how much is the average of our selling price. For 1000 shares, it will show average selling price. But instead of using market order, if we use limit order, what will happen? I can choose at which level I want to sell. If I want to sell at 3010 rupees, then it will get sold only when price comes to 3010 rupees. It will not get sold before that. Suppose price comes up to 3010, there are 500 sellers and I have placed 1000 quantity. My execution will happen up to 1500 quantity, and remaining 500 may not get sold if prices fall from there. It is possible that it may sell just 100 quantity and then prices can fall again without execution of complete quantity. So when we are using limit order, it is not necessary that all the orders will get executed, all the quantity will get executed. Suppose I want to buy at 2800, price comes down up to 2800, touches it and again goes up. Full quantity will not get executed sometimes it may get executed. But if it goes to 2799, then full quantity will get executed definitely without any doubt. But it just has touched that level and went up, then this quantity may not get executed if we are using limit order. Okay.
Sir, what's the difference between intraday and long-term order? If
Intraday
we
order, if
order-
we are using, then it will get executed by end of the day at 310, 315, 320 as per broker. But if you are not selling that, if you are not squaring off the
No,
order, broker will square off that order.
No, but if we order in long term, there is any more charges?
So if you are using long-term order but exiting on same day, then there are no separate charges. It will be treated as intraday order. If you are using intraday order, you can convert it later on to long-term also before square off happens. And if you have used long-term, you can square off intraday also. Sometimes some stocks don't allow this. If they are in some surveillance, then they don't allow intraday trading, and same day square off is not allowed in them. You have to square off
But
when.
charges are same for long term and intraday order or different?
No, they are different.
If
They are
square
different.
if square off on same day, then
They are same. That's what I said. If you square off long-term order on same day, then it will be treated as intraday order.
okay.
So you can start with anything, but you can square off. And if you square off on same day, then it will be considered as intraday order. If you carry it overnight, then it will be long-term and charges will come later on when you sell it.
And validity day, immediate, minutes, IOC means what?
Immediate or cancel. So if you place this order and select this. If the order is not executed at same time, then it will get cancelled. If you use minutes, suppose you want this order to be valid only for 5 minutes and it is not executed within next 5 minutes, then this will get cancelled.
And
After
what
that,
is
it will
this
not
regular?
execute.
What is this on upside quick regular cover AMO iceberg?
So I'm explaining everything one by one, but before that, ask any questions for the things which I have covered. Don't go ahead of that. Yes.
Prashant, I have a question. So
Yes.
suppose if I I click regular, right? So in
Yes.
regular, if you click intraday, there is margin
Yes.
is showing something like I think I cannot read it properly, but 5.5
560.
560.
Yes.
See, so this is the margin and these are the charges. So charges is of I think the Zerodha charges
Yes, these are
or the
Zerodha
charges
charges as well as exchange charges and all taxes, everything.
now if in this I go for long term, so if you go for long term
Yes.
instead of intraday, if you go for long term, then it shows amount. So yeah, so what is this amount? Matlab, this is what the charge of per share.
Yeah. So I will explain this thing. Now, when we are taking intraday trades, it shows margin. What is meaning of margin? Now, if we have in the funds, if we have suppose 1000 rupees cash, and if we have shares worth 10 lakh rupees, in funds we can see 1000, but in margin, if we have placed that shares, those shares worth 10 lakh rupees, then it will show some margin. It is called as collateral margin, and we can use that for trading purpose. That margin can be used for intraday trading, or that margin can be used for futures and options trading. For options, buying is not allowed with margin, but selling is allowed with margin. So you can use your portfolio, you can place that, it will create collateral margin. You can use that collateral margin to trade for intraday, or you can use that margin for futures trade or option trading. You can buy or sell futures, but you can only sell options. You cannot buy option with margin money. And here we can see margin is 1,40,000. If we have just 1000 rupees funds, but we have placed margin, then we can take this trade for intraday. But when it is long term, it is showing amount. And suppose we want to buy 250 shares, which is worth one lot of Reliance. Then we need 7 lakh rupees of cash. But if we are doing this for intraday, we need 1,40,000 rupees of margin. So we don't need that much of cash in our account, but collateral margin can also be used for this kind of trade. We can use intraday order and collateral margin will be used. If we have profit on same day, we can exit. If we have loss on same day, we have to exit. And whatever is the net, it will come in funds. If we make profit, it will be added to our fund. If we make net loss, it will be reduced from your funds. Suppose you have 1000 rupees fund and you made losses of 5,000 rupees. Then you will have to pay in 4,000 rupees later on to make it zero. So this is how it works. Funds are different, margin is different, means that amount is for cash and margin is for FNO or intraday.
But Prashant,
So,
if I want to buy,
Yes, Monica?
yeah. So if I want to buy, but I need a fund in my account, na. So I
Yes,
can
yes,
buy
yes.
without having the funds in my account for intraday.
Yes, you suppose you have some stocks. You have bought some stocks for your portfolio. You have stocks worth 10 lakh rupees and you place them. Then it will be added as collateral margin. You can use that collateral margin and you can buy for intraday, or you can also sell for intraday. So you can buy Reliance or sell Reliance for intraday purpose using intraday order, and that is possible, but you have to square off on same day. And even if you have
Okay.
just 1000 rupees, you can trade worth 1,50,000 if you have collateral margin. If you don't have collateral margin, then you cannot take that trade without funds.
So how to get that collateral margin?
In your account, if you have shares, I don't have any shares in this account. I don't use this for means this is
Yeah, shares of
dormant
other
account.
company you mean to say?
Yes,
Shares
yes.
of other Acha, acha.
Okay.
Okay, so that total amount, if we have, suppose I have 10 lakh shares
Yeah.
of other
So you will be
companies, so
able to
that is
see
a collateral
positions.
margin.
Yes. So in this, you have bought some shares, you can pledge them. There is option to pledge them. You can search YouTube video how to pledge options in Zerodha or whichever broker you are using. It will show a nice video how to pledge that, and you will be able to see that in funds. Here I can see there is minus 1 rupee 30 paise, and there is margin, available margin, used margin, available cash, everything will be visible. So if you have pledged, you'll be able to see that pledged margin here, and you'll be able to see available cash here.
Sir, by what time you have to
Okay,
square
thank
up the call? Otherwise, pledge margin is used.
Pledged margin will be used at the time when you place
No,
the
no.
order.
But if you
But
don't, if,
yeah,
if
so
you don't
you have
want
to
to,
square off as per the broker. Some brokers allow you to square off before
like Zerodha,
310. I don't know about Zerodha. You have to search that. But some brokers allow squaring off before 310. After that, they will square off on their own without waiting for your confirmation. Some brokers allow this up to 315. Some brokers allow up to 320. Some allow up to 325 also. So these are broker specific things, and you can check with broker how much is the time allowed, till what time you have to exit that trade. Or else,
and
if you
what about,
don't exit intraday, they will exit on your part. They will charge some
and
difference
they
amount
do
also.
anything to that pledge says that already if I have 1 CR stocks
No, they
in
didn't. They can't do
pledge.
anything to pledge shares unless you have margin shortfall.
Sir,
So
Okay.
suppose you have funds of 1,000 rupee and you have made losses of 10,000 rupees. There is deficit of 9,000 rupee. You have to pay in that 9,000 rupee. If you don't pay in time limit, then they can sell from pledged shares and recover that loss.
Okay.
sir,
Dr.
Yes, ma'am.
Prashant,
Yeah, I will take question of Ashish Jain. He had asked earlier, and then I will come back to you, ma'am. Okay, Dr. Ashish Jain.
sir, so do you mean that we can use this margin money to buy and sell options as well as futures?
No, I said that margin money cannot be used for buying options.
Okay. Okay. Only for the
It cannot
selling.
be used for buying options. It cannot be used for buying shares for long term.
Long term. Okay.
But intraday trading can be done, and option selling can be done. Future buying or future selling can be done with margin money.
Okay, sir. Thank you.
Yes. Yes, ma'am. What is your question?
if suppose we buy for a long term and then we
Yes.
see at the end of the day there is some profit, so we sell it off and then it will be counted as interest.
So it will be considered as intraday trade.
Okay. And the brokerage charges will be levied accordingly.
Yes, it will be charged as per intraday trade.
And so can you please tell us again that margin money cannot be used, it can be used for buying futures and selling futures and for intraday trade.
Intraday trades, buying future, selling future, and selling options. Intraday option buying cannot be done with margin money. Option buying has to be with the funds available.
No, sorry, I didn't get where is the margin available, visible? Because what is visible in the screen as 599.99 is actually the margin required, not the.
Margin available will be visible in funds here.
Okay. But it will be the same as the funds available, right? Usually.
If you have not placed your stocks, then it will be same. If you have placed your stocks, then it will be different.
Okay.
Prashant, this is a very basic question. What is future and option? I did not get when you're talking about future and option. Sorry if I
So,
missed anything.
no problem, no problem. See, these are very important questions which we want to understand. Now, when we see this Reliance, this is a share of Reliance which we want to buy or sell. Okay. And now there is this thing, you can see August future call put. If we click on this buy on future, what does it show? It is showing 250 quantity, right? If I cancel this, if I select this Reliance, I can buy or sell any number of quantity. If I want to buy 11 stocks, I can do so. If I select August future and if I want to enter 15 quantity, if when I place order, it will not go because quantity is 15, but lot size is 250. Therefore, when I click here, it is showing 250 immediately. And if I click here, it will increase with that number. 250 quantity is increasing every time. Whereas if I go here and click here, increase quantity, it is increasing by one number. And here we don't see anything at bottom, but when we select here, we can see one lot. So either one lot, two lots, three lots, we can select any number of lots. Now, what is meaning of this future? Suppose we want to buy shares, we can select any quantity. But if you have larger capital in and you want to deploy larger capital, then you can use future also. At a time, you can buy 250 quantity or multiple of that. You can also do that same thing with stocks, but it will get executed at different prices. This is one lot and it will get executed at same price. And main important thing here is margin requirement is less. If we go for buying 250 shares, we need 7,50,000 rupees cash. But for futures, we need margin. We don't need cash. We can take this trade based on our margin available. Why is futures and options used primarily? These are hedging products. What is meaning of hedging? Suppose you have bought Reliance at 1,000 rupees cost. Now it is trading at 3,000 rupees and you have bought 250 shares. Now you feel that it is in consider Adani ENT scenario where at 4,000 levels it had shown a black candle and it had shown you should exit your holdings, but you don't want to exit your holding, you just want to hedge it so that in case it falls you will not make losses. So that is the primary purpose of introduction of futures and options. When we use futures, 250 quantity of shares, if we have that much quantity in our account and if we sell 250 quantity of future, what will happen when prices fall and we have already sold future? This future sold position will show us profit. The stock holding will show us losses, but that will be covered and that will be canceling each other. When we exit this in profit, we'll get that much of profit, but there will be loss which will be visible in our portfolio. When stock prices reach same level again, that loss will also get covered. So we can actually make profit from this trade of selling future. If we don't have anything in holding and we feel that Reliance is going to fall, in the same manner where there was the indication for Adani ENT fall, and if I'm not holding Adani ENT stocks, but I feel that Adani ENT is likely to fall from here and I want to make profit, so I can sell future. It is possible to sell stocks or sell futures. We can sell stocks using intraday orders. We can, for positional trades, means for carryover, we can use futures. So if we sell these futures today, we can cover after 5 days, after 10 days, we can buy at lower levels when it comes down below our buying level, selling level. So if I sell today at 3,000 and in few days, if it comes to 2,500, I am in profit of 500 points for 250 quantity. So whatever is the profit, if I want to book that much profit, I will have to buy it back. For physical shares, it is not possible to sell before and buy later on if we are not holding that. But for futures, it is possible to sell. Even if we are not holding it, we can sell this and buy later on. Or else we can buy before and we can sell later on with collateral margin. Even if we don't have funds, we can use collateral margin. This has high leverage. We can see it is requiring margin of 1,33,000. It is 1/5 of actual margin required to buy 250 shares. So futures provide us opportunity to buy or sell before and execute later on also, means square off later on. We can sell before and buy later. It gives us leverage. So if we have just 1,40,000 rupees, we can trade worth 7 lakh rupees. Disadvantage is we can lose 5 times more amount of money because we are having just 1,40,000. We are deploying just 1,40,000 and we are taking leverage. So profit can be 5 times, losses can be 5 times. I advise future trading only when it fits in our cash trading. What does that mean? Suppose we have a chart. Let me show you chart of Reliance. So this is a daily chart of Reliance. And when it came to this area, this is our buying area already printed on the chart. This is our stop loss. How much is the stop loss? It is 24 rupees stop loss. So when we buy at top of this candle, we know that our stop loss is 24 rupees. It has gone below that stop loss, but our stop loss is on closing basis. I'm going to explain all these things later on. Don't ask questions on this aspect right now. So here risk is 24 rupees. And if we want to buy 250 shares, how much will be risk? Let me calculate it. So 250 into 24. It is 6,000 rupees. Okay. If your risk is 6,000 rupees and you are willing to take that much of risk, then you can buy 250 shares. Or you can use one lot of Reliance future and take that trade. Now, instead of this 24 rupees, suppose our risk is here 100 rupees. Suppose we place order, a stop loss is around 100 rupees. Okay. So this is just for explanation. Okay. So if our risk is 100 rupees and price comes to this level, we want to buy. If we buy 250 shares, how much is our risk? 25,000 rupees. If you are willing to take that much of risk, then you can use one lot of future for this trade execution. But if you are not willing to take the 25,000 rupees loss, but still want to go ahead with this trade, what you can do? You can, suppose your risk is 10,000 rupees, you can buy 100 shares. You will not be allowed to trade in futures. But if you are able to take 25,000 risk, then you can either buy 100 shares or you can buy either buy 250 shares or you can buy one lot worth of future. If your risk is 50,000, you are able to take 50,000 rupees risk, then you can buy 500 shares or you can trade in two lots of future. Normally, what do people do? They want to trade in futures and they don't want to take big risk also. They will reduce the stop loss to certain limit where they can take two lots. That is not appropriate way. The stop loss has to be decided by technical analysis. Position size comes accordingly. Here we have 24 rupees stop loss. And if it fits on in our risk appetite, then we can take a trade with future. If it doesn't, we can take a trade with cash. So this is future. Next thing is option. Options are here you can see 3,000 call, 3,000 put. Simply speaking, when we buy call, if we feel that prices are likely to go up, at that time we buy call. If we feel prices are going to fall down, at that time we buy put. These are also for hedging purpose. Suppose you have bought Reliance and you feel that markets are likely to fall and you want some hedging, then you can buy put. Okay. Understood, Monica?
So, Prashant, for hedging, matlab we can keep it on hold, something like that.
So hedging means you have bought Reliance, you are holding that in your portfolio, and you have a fear that from here Reliance may come down. It may come down by 500 points, and you have bought Reliance share, but you don't want to make losses in your portfolio. For that purpose, you are hedging it. For example, let me show it to you on the chart of Adani ENT. So this is Adani ENT chart. We can see many a times what happens. I will show it to you. There is something like this. There is a change. Okay. Candle color turns red, but later on it goes up again and becomes green. So this is also possible many times. Now at this time, when it became red, you are fearing that prices may fall down, but you are not sure and you don't want to exit your portfolio. What you can do when it comes back here at selling level, you have not exited your portfolio and you are not willing to exit your portfolio, you can buy put here so that you will be safe in case stock falls down. And if it keeps on going higher, you will lose that premium for safety purpose. So if you buy put here and it created another continuation here, at this time, for some reason, you were not able to exit. A continuation happened at this candle's close, and next day there was gap down open, and you are not able to exit. But because you have bought put, the portfolio is hedged, and you are not making huge amount of losses. Instead of that large loss, your losses will be slightly reduced. So that is hedging. And when this kind of fall happens, even if you exit your portfolio completely at this level, this put buy will provide you protection and you will be able to exit with minimal losses. But if you have not bought put or if you are not sold futures, then at this level, your losses will be very big. So that is the purpose of hedging, to reduce the losses. But for that, you must know when to buy hedges and when not to buy hedges, when to just continue holding. Okay. And practically, I don't do hedging for my own investment or trading. I just exit if there is a signal to exit. It gives me much
Okay.
more peace.
Okay. Yeah, good.
Okay.
So this yeah.
Yes, Jaita ma'am.
Suppose we are buying futures. It happened to me actually since I wanted to try out everything. Uh, I am buying future with collateral margin, and now
Okay.
the future with time the future value goes down. I'm at a loss. So my
Yes.
collaterals are with the liquid fees. So ultimately, I mean, unable to understand how do I how is that fund adjusted? That do the uh, uh, broker directly because they have to use that loss, make up for the loss. So per day, the liquid fees will be sorted and converted to cash and to pay up for the loss. Or what is the purpose of the collateral? I mean,
So
versus
collateral
cash.
margin, you have placed liquid bees, you have used liquid bees as your collateral. It is possible for broker to square off or sell those liquid bees and recover the losses if you are not paying in. So all the brokers have different criteria. They use different criterias, and you will have to ask your broker what will happen to your holding when they will sell, or when they will tell, will they mail you to feed in the money, or what is the process.
Okay, and
Normally, I don't
as
do this. I don't allow it to go in negative. I keep the cash, adequate cash, and that's why I have not asked about this, how it goes on. But the broker will be able to answer this question.
okay, and every day the settlement is done, right? For each day, the trading.
Yes, settlement is usually for every day. For futures and option selling, it is usually for every day. whatever is the amount of profit, it is added to your account, or whatever is the loss, it is reduced from your account every day. And final settlement happens when you exit the trade.
So, the purpose of collateral margin is quite risky, isn't it? I mean, we are, rather than to keep it, increases the limit. Suppose my limit capacity is 5 lakh, and then with collateral it becomes 10 lakh. And if the market, if I am not choosing the stock right, we are buying at the right time, I would be suffering a huge loss, and I'll be wiping off my stock if I'm putting my stock as collateral.
I could not understand your question properly, but let me explain. I understood that what will happen means how to use collateral is your basic question. I would
Yes.
suggest a few things. See, there is position sizing. What is meaning of position sizing? We have to deploy as per a risk. Normally, what do people do? They have collateral margin available and they deploy everything because the margin is available. Sometimes when market is favorable, they make very big profits. But when markets are not favorable, they make very big losses. To avoid this, what can we do? I use this thing. I will tell you. Suppose I am taking trades with Reliance on 75-minute charts, maybe. Or we'll go to Bank Nifty. Okay, this is the chart of Bank Nifty 15-minute chart. And now, suppose I have bought somewhere here. Consider this is not a red candle. Okay, just for practical explanation purpose. Now, if I bought here, from here, there was green candle, price came down, and I bought here, prices went up. Now it created this, went up again, came down again. So when this is created, I am able to trail my stop loss. Earlier, my stop loss, suppose, is below this 49,650, and now it is at 50,000 rupees. Now, if my trailing stop is hit, I have bought here. If my trailing stop is hit, what will happen? Will I make profit or will I make loss?
Obviously,
Trading
profit,
stop
sir.
loss is a profit.
Yes, so I will be able to make profit. From here, again it went up, again it went up here. Now my stop loss is trailed at this level. And if I exit, if stop is hit, I will be able to make profit. Okay. Now, suppose I have taken one trade here, prices went up nicely, and they created this zone on this day. Okay. On this day, it has created a zone here. And my stop loss is trailed here. I know immediately that my stop loss can be trailed here. Now, I don't have any risk in this trade. So what I can do, I can use my money and take another trade. Suppose, for example, I have 5 lakh rupees in my account and I have a margin worth 20 lakh rupees. Total is 25 lakh rupees. But initially, I will not deploy all amount. I will deploy just 2 lakh rupees to take one lot worth trade. And when it is in profits and the stop loss is trailed in profit, I can add one more trade, maybe in same Bank Nifty or maybe in some other asset, and I can deploy some more capital. So suppose as stop loss is trailed and I want to take more risk, I will deploy more amount. I deploy 3 lakh rupees in second trade, for example. And second trade also goes in same manner. This is going higher. It is giving me higher stop loss. And the second trade which I took, it is also in profit. For example, like this, it went up, created new buying area and new stop loss. Second trade also is in profit and stop loss is also trailed for that. Now I know that even in both trades, if trailing stop is hit, I will not lose any money. Then I can deploy my capital in third. But I had funds, just 5 lakh rupees of fund. I can deploy fund from margin, and that fund will be used and I can keep on adding positions. As long as previous trades are going in profit and stop loss is getting trailed, I can keep on adding positions. This will not increase my risk at all. Maximum risk will be always defined. Some positions will be in profit, and if suppose I take new trade and it hits the stop loss, I will exit that in loss, but other trades are in profit. If this trade goes in loss, means it hits the stop loss. I'm exiting this trade in profit. So my capital will be free. I can use that capital again for next trade. So at a time, we have to keep certain limit. We don't have to see how much margin is available. We have to see how much risk is, uh, how much is the risk on our open positions. And that way we have to deploy the capital. Okay.
So you'll teach us the risk, how much risk to reward risk. That's what we'll learn it in the course.
Yes, risk to reward and all those things we are going to learn. Position allocation and all these things we are going to learn. We'll go back to our order placement. Okay. So, Monica, is it clear? Futures and options?
Yeah, Prashant.
Okay. Then we have this. First thing is buy order, regular, intraday, long term. Till this, everything is clear. Then I have explained market order and limit order. Both things are clear, right? Any confusion in market order or limit order? So I guess there is no confusion in this. Then I will tell you about stop loss order and stop loss market order. So there are two types of stop loss order. One is stop loss limit order, another is stop loss market order. These are slightly similar to market order and limit order. Now there is this stop loss market order. First we'll discuss that order. Stop loss market orders may not be applicable for everything. Some stocks may not have stop loss market orders. Futures have stop loss market order possible. Options don't allow stop loss market orders. You have to see which thing has stop loss market and which thing requires stop loss limit. I will explain what is stop loss market and how to use that. Suppose we want to buy 1000 shares, but we want to buy at specific level. For example, it is trading at 29.99 or 3000 rupees, and we see that there is a resistance at 3050, and we want to buy only when 3050 is crossed, that resistance is broken, or 3010 for example. So trigger price will be 3010 or 3010 rupees 10 paise. Higher than that resistance, we have to enter the trigger when we want to buy, because we want to buy when prices will cross above certain limit. If we want to buy at lower limit, we have to place limit order. But if we want to buy at higher order, we have to place trigger stop loss market order. When prices cross 3010, from 3000 it goes up and crosses 3010 and crosses 3010 rupees 10 paise. That time it will trigger the order and it will execute 1000 quantity at whatever is the prices available. It can get executed at 3010 rupees 10 paise if there is enough liquidity, or it can go on up to 3011, 3012, 3015, whatever is the orders placed. Adequate quantities placed higher above this. Till that time, our order will get executed and we will get complete fill with stop loss market order. Then there is another stop loss limit order. So in this we have trigger price and we have price to buy. What is meaning of trigger? The order will get triggered only at this level. And if we use limit order also at same level, what will happen? Once price crosses 3010 rupees 10 paise, then our order will get executed, but it will get executed at 3010 rupees 10 paise. It will work as a limit order. If from 3010 rupees it goes directly to 3015 and doesn't come back to 3010 rupees 10 paise, then this order will not get executed. But if it goes up, comes down again, and touches this or comes below, then our order will get executed. So when we are using stop loss limit order, to make sure that our order will get executed, what we have to do, we have to add some margin. Some margin means some space. Suppose Reliance has very good liquidity. As you know, Reliance has very good liquidity. 1000 shares can very well get executed within 2 rupees limit. So we can use this trigger price 3010 rupee 10 paise, execution 3012 rupees. This does not mean that our buying will happen at 3012 rupees. Buying will start immediately at 3010 rupees 10 paise and it will complete before 3010 12 or at the 3012 maximum. If it jumps directly to 3015, it will not get executed. But if it goes gradually up to 3012, then 1000 quantity will be executed. So in highly liquid stocks, even if we have 3011 just 90 paise of spread, even then it can get executed. But when stocks are highly illiquid, then even 12 2 rupee 3 rupee 5 rupee may not complete our order. So we have to see bid and offer. We have to see how much is the quantity placed. Accordingly, we have to judge and use this price for execution. This is same for buying as well as selling. When we are selling, we have to use lower levels, 29.90 rupees, and trigger can be 29.90 rupees or less than that. So we can use 29.88. This kind of order can be placed, and when price falls below 29.90, it will start selling up to 29.88 or till our quantity is executed. So have you understood this stop loss and stop loss limit? Stop loss market will execute immediately whatever is the price, but for stop loss limit, it will get executed at the prices which we enter. Okay?
Prashant, I have one question here.
Yes.
If here in the screen you are showing 2990 as the
Yes.
trigger price, so if it triggers the, if it gets triggered,
Yes.
but the quantity is not complete, then
Yes.
the price goes down below the trigger price. Will it still
Yes.
hold, or whether it is, it will not stop?
So trigger is 29.90. It will start executing. 29.88 came, but 1000 quantity is not completed. Suppose 500 quantity got executed and prices went to 29.87.9. And this 500 quantity is still pending. So it will stay pending if price doesn't visit 29.88. As soon as price reaches 29.88, this quantity will get executed. If prices
No,
don't
no,
come
I'm
back and
talking
keep
about
falling.
the trigger price. Once triggered, it remains till the quantity is exhausted, or it can get re-triggered also if the trigger is crossed.
Yeah, once trigger is once the price is triggered, then it will get executed and it can get executed up to this price. So trigger once done, it will complete the execution. But if it goes even below our limit order and order is not completed, the trigger will still remain valid and prices will, if it comes up again up to 29.88, then execution will happen. If it doesn't come, it is not possible for it to execute. Suppose there is very bad news, it falls to 29.87 and it keeps falling, 29.50 comes, it has not come back to your execution price. It will not execute. The trigger will still remain pending, means it is still valid to sell. But because there is no buyer at this level, buyers are coming at lower level. Nobody is willing to buy at 29.88. So your execution will not happen.
This is for stop loss order.
Yes, stop loss or stop loss order. We have trigger and price in stop loss order. For market or stop loss market, what will happen? As soon as trigger is the price is triggered at stop loss level, market order will be placed and it will exit completely at whatever is the possible price, but execution will be complete. Okay.
So,
When do you place stop loss market and stop loss? What is the what are the factors?
So stop loss orders are possible. Stop loss market orders are possible for futures. Stop loss orders are possible for cash stocks. Stop loss markets orders are not possible for options or for some cash stocks. So we have to check that which orders are possible for which kind of thing. Yes, Monica?
Prashant, this stop loss which is there, that is for selling, right? For buying also we have stop loss.
Yes, for buying also is possible to place stop loss. Suppose you want to buy above certain level. Suppose you want
But
to
why
buy
will
for
I
a
buy
breakout.
about? But usually we try to buy at a lower margin. Why we want to buy at higher the higher price?
Yes, so I will explain that with a chart. Okay, now this is a chart of Reliance. Are you able to see this?
Yeah.
Okay. Now there is something which is called as momentum trading, and the other thing is retracement. Now we can see there is a resistance here, and this will be broken when price closes above this 2367. If candle closes above this, then resistance is broken and prices are likely to go higher. Sometimes price can come down and give retracement entry. Sometimes it cannot come down. It just keeps going higher and higher. Here in next candle, sorry. In this one candle, we can see candle has closed above that resistance and candle color has turned green. Now, if we place limit order to buy here, price did not come there and we were not able to buy. Some people feel that now the resistance is broken and from here it is likely to keep on moving higher and higher. Now, what I can do, I can place order to buy above this 2388 and I can place stop loss below this or below this anywhere. But I feel that if price crosses about 2388, it is likely to keep on going higher. Maybe it can come up to this, above this, it can continue moving higher. So at this level, when price crossed, it will trigger my entry. And it is good for momentum. If we place limit order, suppose we place limit order to buy at this level, 2351. Even though prices came down, it did not come up to that level and it went up and it has continuously gone up from there. So some people have an opinion that somewhere, sometimes breakout like this happens, next day there is a gap up and it continues moving higher. So if it continues moving higher, it will not come down to give retracement entry. Only breakout entries can work at that time. So we place buy order at both the resistance level. And when we feel that it is likely to come back, then we will place limit order. For example, it went up. Immediately from here, some people may have used breakout orders and they may have booked profit. And if we want to buy on retracement, we'll place limit order at this. Price comes down at this level and after that it is going higher. So we have to decide whether we are taking breakout trade or we are taking retracement trade. Accordingly, we can place breakout markets orders or stop loss market order for buying. Okay, Monica?
Okay, so basically it is to break the resistance.
Not to break the resistance, we are buying after the resistance is broken. So we feel that this is a resistance level. Once that is broken, we will buy. For that purpose, we can buy. For example, here, suppose now the resistance is visible at 3055. When this is broken, we can buy and prices can go on up to this level also. So that is thought process of some people.
Okay.
And this is not a buy call. I'm not telling you to buy about 3055 because at that time stop loss will be larger. But candle color will change to green if candle closes above 3055. There will be new buying zone formed at this level here. So if candle closes above 3055, you will be able to see that buy area has formed between 2967 to 2866. Let us see in few days if this happens or not. Okay.
So, what is retracement trading? Can you explain that again?
I will not explain it now. I will explain it during the course.
Okay.
Okay. So any question about order? So stop loss market, both orders are
So
covered.
main difference between stop loss and stop loss market is what?
Stop loss market order is not applicable on all assets. Options don't take stop loss market order. Therefore, we need to use stop loss limit order. When we place stop loss market order will get executed at whatever is the price available. When we use stop loss limit order, then order will get executed only between this range 3010 to 3012 for buying. If it has gone above 3012 and doesn't come back, then order will not get completed. But prices remain within this range, then order will get completed. That is the only difference between stop loss and stop loss market. For stop loss market, even if prices go to 3015, it will get completed. For stop loss limit, it will not get completed. Same for
Okay, sir.
selling side.
Okay, sir.
So stop loss markets have assurance that order will be completed. Stop loss limit doesn't
Okay,
have
sir.
assurance of completion. Many people
Okay,
use
sir.
this kind of order 3010, 3010. And if market is in momentum and this level is not reached again, sometimes it can also jump the price. It can go immediately above without touching this price. So this order, even one share will not be bought. That is also possible. So
Okay, sir.
whenever you are placing a stop loss limit order, don't place same thing. If you want with surety that this order should get executed, don't place this kind of order. Keep some distance between those two. And if you are taking the trade, you can keep it as same because you are using this as a limit order. But if you are exiting the current trade, don't use this kind of trade order. Keep some space for assurance that it will get executed. Whatever happens, keep some space for exit of trade. Okay.
Prashant, can we
Yes,
decide to exit on while placing the order only? Like, suppose if I bought it at 3000 and if the prices reach to, for example, 2500 and I want to sell it, I'm busy, I cannot see that. So, can I book like that way? So that to minimize the loss?
Yes. So it is possible, but I will show cover order. What is cover order? Here we are placing order to buy. We can either use limit order or we can use market order. So when we use limit order, suppose we are placing limit order to buy at 29.90 and our stop loss trigger is 29.50. What does this mean? We want to buy at 29.90 rupees and we are placing a stop loss trigger also. If prices fall below this, if price reaches this, our order of buying will take place, and if stop loss is triggered, then it will exit. So this is a cover order where we are placing buy order as well as stop loss order in same order. This is always intraday. It cannot be positional order. So if you want to buy for investment purpose, this kind of order cannot be used. There is a way out for this, and it is my execution tool which I will show you during the course. But if you want to take intraday trade, this is possible here. You can place limit order to buy, stop loss order for that, but target cannot be placed with this. For this, I have created a tool which I call as a set tool, stop loss, entry, and target. I can place stop loss, entry, and target all these three things at same time, and the trade can get executed without me watching over that trade. So it is possible using that special software. But with brokers, every broker does not provide that. It was earlier available. It was called as bracket order. I don't know why it is not available now, but it can be used in this manner. Cover order. Then there is AMO order. It is aftermarket order. Intraday or long term, these are same things. What we can do is we can place orders for Monday. Right now we can place orders for Monday. Suppose you want to buy at 29.50 rupees. We know that Reliance is trading at 23,000 rupees, but we want to buy at 29.50. We can try our luck, place aftermarket order, and place to sell quantity, buy quantity, maybe 10 quantity. And when you place validity, it should be have validity of day. because it is aftermarket order. It cannot be immediate. So this order will get executed during pre-market. So 9 to 9:08, this order will get executed if somebody is willing to sell at this level at 29.50. Sometimes it works, sometimes it doesn't work. We can also place sell order. Suppose you want to sell at 3050 rupees, you may place this kind of order beforehand. Once the market closes, you can place aftermarket order. And between
It's
9 to
intraday or
9:08,
long term?
we can use intraday or we can use long term. So if we use long term, portfolio shares will be sold or bought. So you can use this aftermarket order, and the order will get executed within first 8 minutes, 9 to 9:08. If it is not executed during that time, then it will be placed as a routine order for remaining part of the day. And this cannot be used for options or futures, because futures and options are executed only after 9:15. So even if you place these AMO orders right now, these will be executed only after 9:15. They will not be executed during pre-open for
The difference
FNO.
between GTT, then
What, ma'am?
GTT orders, GTT orders, good to
GTT
go,
order, GTT order, yeah. Good till trigger.
good to
So I don't have any idea about this iceberg order. You will have to check with the broker. And where is the GTT order? I think GTT. Here we have
Go in the
GTT
regular
order.
order.
Yeah. So I will explain GTT order.
AMO
We can
order
place
and GTT almost same, or AMO is a part of GTT.
AMO is aftermarket order. It will be valid only for one day. Suppose you place this order today, it will be valid only for next trading day. It will not be carried forward. But GTT is valid. Suppose I want to buy Nifty future, then create GTT. I can use this GTT. I can use buy or sell, and it can be single or OCO. OCO means one cancels another. Okay. So what is meaning of one cancels another? I can use stop loss order for buy and target. Okay. So I can place my target also, and I can use my entry also. Suppose I have bought. I don't exactly know how it works because I don't use these orders, GTT orders. But let's check for Nifty once again. Simple one or simple order Nifty. I want to create GTT to buy. So what can I do? I can use my trigger price 25,000, 24,800. Okay, it is slightly below the latest price. I want to buy this, place quantity, buy 24,800. Now, when I create this kind of GTT order, what will happen? If I place the GTT order, this order will get executed only when price is triggered at 24,800 and execution happens at 24,800 or less than that. Okay. So if price falls below 24,800, my order will get triggered because it is current price is about 24,800. So as soon as price falls below 24,800, my order will be executed immediately. If it comes down to 24,800, it will get executed at 24,800. So this is how GTT order will work, and this is single GTT order. We can use it for sell or buy. This will get executed only when price touches or trigger, and it can remain valid for long term. It is not just one day. It can complete whenever the price is triggered. If expiry happens before trigger of this price, then it will get cancelled. If the expiry remains valid, then it will not get cancelled. It will get executed. So this is single buy or single sell. We can use similar thing. If we want to sell, suppose at 25,000, and we can use this 25,000, 25,000. Trigger price is 25,000. For selling, we can use lower trigger 24,980. Something like this can also be used. Higher trigger cannot be used because we are selling. So we have to use price below the trigger level. And when it crosses this level, it will execute. Now, when suppose we are buying and we want to place one cancels other order, then for stop loss and target, if we have already if we are buying for a target, that means we are already sold, right? And I will explain this for bought position. Mostly people buy. So if you have already bought something, for example, we had placed buy order for this Nifty at 24,800. Okay. Our execution happened at 24,800. Now we want to exit this trade. What will we do? We will have to sell this. So we will place sell order, right? So click on sell. And Monica, your question was if we don't want to watch, can we place buy and sell both? It is sell both. So it is possible with this GTT order. There are two things. One is stop loss. We have already bought and we want to sell. So if we have already bought and we want to sell, then stop loss price will be less than buying price. So it will be suppose we have bought at 24,800 and we want to place stop loss at 24,500. So trigger price will be 24,500 and execution can be below 24,500. So this will be our stop loss order and target order can be 25,500. Quantity will be same 25,490. So this way we can place order for target. We have already bought, therefore we are placing sell order. One cancels other. If our stop loss is triggered first, then target will be cancelled. If target is triggered first, then stop loss will be cancelled. Okay, have you understood GTT?
Yes, sir.
What is difference between target and stop loss?
So if you have bought at 24,800 rupees, price come to 24,500. Are you making profit or loss?
Loss.
You are making loss. And you have seen how Adani ENT fell down very rapidly. Nifty will not fall that in that manner, but your analysis will be wrong at that time. Just a minute, I will mute others. Yeah. So when we see that we are in loss, that means our analysis is wrong and prices can further fall. From 24,500, it can go up to 24,000, 23,000 also. We don't know. But whatever our analysis was that it should not come below 24,500. And if it comes below that, our analysis is wrong. We should exit from that trade to avoid further losses. It may come up again. It may give us profit also. That is possible. But our analysis was wrong and we have to exit from that trade because to avoid further losses or getting stuck in that trade. For that, we are using this stop loss. So you are making loss of 300 rupees, 300 points on 25 quantity. Means you are making loss of almost 7,500 rupees and you are exiting that trade. That is fine. If it continues falling, you will not make more losses. And if it goes up, you will not have any option to exit at lower losses. But that is part and parcel of trading. You have to exit at predefined levels. So you will exit with stop loss and loss will be booked. But you will have your capital free. You will have peace of mind. You will not have to think, what should I do now? Similarly, for profit, we have placed 2500. It is almost 700 rupees profit from 24,800 rupees buying. So if it gives you profit, at this time you have decided I will book profit at this level because it is some important level or whatever is your analysis and you want to exit at that level. So you are booking your profits at that time. So this is target. Okay, Monica?
So target is for profit and stop loss is for loss.
Stop loss is to limit the loss.
Limit the loss.
Yes.
So then we should do this for all the this we do for intraday or for long term also we should do that.
So we can do this for intraday. We can do this for long term also.
Acha. Okay.
It depends on what is your long term. If you are
Hello.
taking trades based on monthly chart, then you don't need to place limit this kind of orders. Or weekly charts also, you don't need to place this kind of orders. Just check every weekend and place order next Monday.
Okay.
Hello.
Yes, Kailash sir.
Sir, iceberg order is for if someone want to sell or buy huge quantity,
If someone
then,
wants to
then
sell or
they
buy,
divide huge quantity of the
okay,
share.
okay, I got it. So suppose
Then
you want to buy
they
1000 quantity, then it
divide.
will split.
Yes, and they want to hide from others.
Okay, okay, okay. So
This
number of
quantity.
legs are written. Okay. So suppose
Yes,
we
yes.
want to, I think maximum is 10 leg. So if you want to buy 1000 quantity but hide from others that single person is buying 1000 quantity, you can enter quantity as 1000, number of legs 10, then it will be split into 100 quantities for 10 orders.
Uh, yes, when one leg is executed, they send another leg for execution.
Okay, 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 okay.
Means as an iceberg, you see only tip of the iceberg,
Yes, that's right.
not
That's right.
below part.
Yes. So big people who want to hide their quantities, they can use this. Means they use this kind of orders. And even if retailers, if they want to place large quantities, they can use this because Zerodha is not used by big institutes. They have their own order placements. They have their own executions. But even we can hide our orders and place these kind of orders.
Yes, sir.
That is good. So I learned something new today.
Why is it good? What is other key?
What, ma'am?
Why is the iceberg option
So
good?
suppose you
What is
want to
other-
hide from other people that you are buying at that large quantity. Suppose you want to place order to buy 1 lakh quantity. And when you place limit order without using iceberg, what will happen? This order will be visible here immediately. That somebody is willing to buy 1 lakh quantity and visible quantity will be 1 lakh. But if you split this, then only 10,000 quantity will be visible at a time. Once that order is executed, next 10,000 quantity will become visible. Once that is executed, next one 10,000 will become visible. So this way, large quantity will not be visible and people will not know that we are trying to buy. Once huge quantity is visible, people will not try to sell. They will feel that there is a big support coming on. Therefore, they will try to buy. Some people will not let the prices come to that level and they will start buying before that. That is the thought process. Okay. Any other questions on this?
So I had one question on this market depth feature. Sometimes it doesn't go till 20 depth.
Yeah, because there is lack of liquidity, so it will not go up to 20.
But
This will not happen with high liquidity stocks.
So, but then the total number of shares for offer or for bid will be much higher than this. So, that does it mean that the other ones are undisclosed quantities?
Yeah, it is possible. There will be many market orders placed, so those market orders will not be visible. Only limit orders are visible in this. And as iceberg orders are shown, the broker will not place the orders immediately, they will place gradually. So those orders will also not be visible.
But the total will be correct, or the total, some of these orders, hidden orders will also be hidden from the total?
Some of the orders will be hidden. Means total number of orders will not always be visible. Those orders which are placed as limit orders, only those will be visible. Hidden orders will not be visible here. We can see open, low, high, close, then there is volume and average price, upper circuit, LTQ, LTT. And there is a total buy and total sell. So total buy and total sell will be only limit orders. It will not be visible. Hidden orders will not be visible here.
What is LTQ and LTT?
I don't know. Last traded quantity and last traded
Time.
time. Yes. Okay.
So you made one philosophical question statement sometime back. You said uh, it is easier to see the candles and the direction in which it is going rather than to hedge using options and futures.
Yes.
So I mean, is it by and large true for somebody who's learned how to look at the candles? Do they need hedging strategies?
See, I don't use hedging because I understand technical analysis. I know how much is the risk and how much I can take.
Okay.
But some people who have very large portfolios, they want to hedge.
Okay.
Retailers usually don't need to hedge because uh, suppose you have bought Reliance, okay? How much quantity as a retailer will you be able to buy or sell?
Maybe 500 max.
Maybe 10,000,
Yeah.
okay? How much is the price of 10,000 shares? If we see
30 lakhs.
30 crore, okay? 10,000 shares will be worth 30 CR, right?
Hmm.
Now, if we go to 1 minute chart and check the volume, how much is the volume in 1 minute? Can you see on left side here
It
in
is 3
last candle?
crores. It is 3 crores.
No, no. On this chart, 3 CR. Okay, 3 CR. Yes, 3 CR. It is 30 million in
Yeah.
the calculator.
Yeah.
After 30, there was comma, so I took it as 30 CR. So suppose this is 3 CR and somebody has a portfolio worth 100 CR. So for 100 CR also, 3 CR for one stock, that person will be able to buy 25 to 30 shares, 30 different companies. That is how the retailers work usually. Okay. So
Yeah.
even if somebody has shares worth 3 CR and 10,000 shares, we can see in 1 minute volume is 13,000 in Reliance. Here we can see 43,000 volume. Let me check smallest candle. This is the smallest candle where volume is 2,800. And this I'm speaking about 1 minute candle.
No, where are you getting the volume?
On left side here, VOL.
Okay.
When I bring cursor on this candle, see this candle has lowest volume here at the bottom. And this candle is showing 2,846 volume, right?
Yeah.
So I can exit my position within 4 candles and means I can sell whole 10,000 quantity. Here in this, we can see there is volume of 48,000, 46,000, 50,000. So should I be really worried in this kind of stock if I'm holding 10,000 quantity, which is very high, large amount of quantity? Even if I have invested 3 CR, I can exit within just one click. And how much will be the slippage? For example, it comes from here to here. It is coming down by 3 rupees. Right?
Okay. Hmm.
So it is coming down by 3 rupees. If I sell 10,000 shares and it comes down by 3 rupees, it is coming. I am making loss of 30,000 rupees. Right?
Yeah.
Will I be worried with capital of 3 CR invested in this? If I lose 30,000 rupees, will I be worried?
No.
No, right? Because it is fraction of a this thing 0.1%. So I am not worried about that. So what I will do instead of hedging, I will just exit when I feel that it is giving me a signal to exit. I will exit immediately in this candle as it is showing me red color. From here to here, it has gone down by 10 rupees,
Hmm.
right? So within a minute, within few seconds, the order will get executed because there is high liquidity in this stock. For retailers or for me, I don't like hedging because I can exit my full position in just one click, and whenever next opportunity comes, I can add again. So
Okay.
if I'm not if I want to exit, I exit here. I'm not worried even if prices go up again here, because I want to avoid the scenario where prices keep falling. In that case, I will make larger losses. So I can exit immediately.
So options and futures are available only for high liquid stocks, highly traded stocks.
Yes, yes. There are
Generally, for
180
retailers, are
stocks.
we saying that this is not required at all? I mean,
As
if
per
we go
my
by your
understanding, it is
philosophy.
not required. Yes.
Okay.
But
there
if
are
you go
some.
by 5-minute chart, 15-minute chart, then some people advise hedging. I usually advise to take trades based on daily charts if you are carrying it forwards for stocks. If you are not carrying forward, then it is not required. Just place the stop loss and exit. If you are carrying it forwards, then use daily chart. And when we take trades based on daily chart or analysis, against us, the big gap downs may not happen. There are less chances. It usually goes in the favor of the trend. It very rarely goes against the trend. Therefore, I don't hedge.
There are people who may try to make small amounts of money by selling options. Is that a good strategy, or options should be used only for hedging?
No, it is good strategy to sell options. It is possible. We can sell large quantities, and in Bank Nifty, we can sell huge quantities and make good profit. It
But
is
large
possible.
quantities will also multiply the risk significantly, right?
So if you want to make big profit, you have to take larger risk, and we have to take trades based on a risk reward. If you want to sell options just for 2000, 3000 rupees gain and 2000, 3000 rupees stop loss, that is also fair. So people who have smaller capital, they can use that kind of trade. If you want to take larger risk and deploy larger capital, then you can increase the quantity. There is nothing wrong in that.
Sir, is there anything like if you sell your whole position, if you are invested already 50 lakh in L&T and you feel that L&T is going down, so you want to hedge it. Instead of that, you exit your whole position and you are in profit, maybe 100% or 200% because it is portfolio stock. Then you will be in long-term capital gain or short-term capital gain.
Yes.
You
So
have
for
to
that,
be
you have to understand all those things, whether it is investment position or it is the trading position, and what will be the implication of exiting the trade, how much taxes you will be paying on that profit. All these things come for that. When we say it is an investment position, usually we go for monthly chart, and the trades can go on for many months, and stop losses are also very big. So here we can see for investment of LT monthly chart, stop loss will be at this 14,1456. Now it is trading at 3500. But if you want to use it for maybe shorter duration using weekly chart, here is the level where at around 2000 rupees entry has been triggered, and now the stop loss is candle close below 3200. If we check from top, if candle closes below this, you are going to lose 20% from your maximum profit. But that is bound to happen. We cannot exit at top or exit at bottom, buy at bottom. This is bound to happen. We have to lose some amount of profit if we want to follow the trend. Now, for weekly investment, weekly chart, when candle closes below 3263, you can exit. If it keeps on going higher and higher, I will show some chart like Cochin Ship. See, this has kept going higher and higher from 194 level to this level. And here it came down also. How much did it come down? It came down by 40%. But it has not hit the stop loss. If you want to capture larger moves, you have to keep stop losses wider. You have to look at the drawdowns also. And it has gone up by 1000%, means it has gone up 14 times. So if you want your capital to grow like this, you have to see drawdowns also, which are maybe 40%, 50%, something like this. Here there was a drawdown where profits came down by 30%. Here there was a drawdown where profits came down by 24%. Now again profits have come down by 30%. And your position should be trailed here at 713. At that level, how much of profit will you lose? You'll lose around 76% of your profit from the top. But if it continues going higher and higher, instead of 14 times, it can also give you 100 times return. So here 1400% is the return. There are some people who will show you they have made 11,000% return. What is the name of that stock? LSIL, I think. Anyways, I don't remember the stock name, but there will be many periods of drawdowns like 40%, 30%. And if you want to make 100 times gain, then you will have to see 70% drawdown in your profit also. So for investment, it is totally different ball game. Now you can also decide to exit based on price action and re-enter. And for that, you have to see how much will be the implication of your taxes. Are you willing to hold on for 70% drawdown, or you are willing to look at this chart on daily time frame? It has turned red and you will exit this right now. And when next opportunity forms, you will buy again and you are happy to pay the taxes for that. So you have to take those calculations into account. I usually don't keep on investing. I usually use daily charts and I'm not worried about the taxes. It can be short-term gain or it can be long-term gain, but I am not worried about it. As far as I am able to capture good moves, see, even on daily chart, how much is the move from here? It has gone up. And this is the exit signal. It has gone up 600%. So 6 times. Stock has gone up 6 times. And how much was the risk involved at this time? If we buy here on green signal, then risk was around 20%. So if I am risking 20% and I am getting 600%, it is giving me 30 times reward, right? So will I be really bothered about taxes here? Hello, am I audible?
Not
Yeah. So it is okay. Means taxes are part and parcel of the game. We have to take them. Either we take decisions based on weekly chart where the stop losses will be much larger and profits will also be much larger. Or if we are more active, we can take decisions based on daily chart. Usually, I don't advise to go on smaller time frames for doctors who are busy professionals. But if you are able to go to the charts on 15-minute, 75-minute charts, then you can take trades based on that. You can invest for 2-3 days or you maybe 2-3 weeks based on 15-minute and 75-minute charts. And we are going to show the results of strategies, number of trades possible in a year or in 3 years also, and how much gain can we make from that kind of trades. Okay. Okay, any other question about order placement? We have covered all the orders. So if there are no questions, we can end the session here.
If you go in, one question, sir. If you go in regular order,
Yes.
there is option written below. If you stop, market limit and stop loss.
Yes.
Yeah, if you hit that, or there was option before written that you can place stop loss order before placing orders. Stop loss and target decided before the taking this order?
It was for GTT, I think.
Yeah, GTT, but before buying, means at the time of placing order, if I'm buying at 3,000 and I want to keep my stop loss at 2,500 and target, not future regular,
This kind of
not
order,
future regular. No, regular order, not future order, regular
not
order.
here, regular order. Okay. So whatever is visible, these are the things which I have covered. This one you are
Yeah,
asking about cover order?
no, regular order.
Not.
But
Uh-huh.
with I'm placing order that if I'm taking Reliance at 3,000,
Mm-hmm.
not for intraday, for long term.
Okay.
At that time only I put stop loss also, that
Okay,
2,500
this
will be
one.
stop loss, and yeah, this one,
Yes.
here it is written.
Yes.
Lower
So
down.
we have to select it long term. Then there is stop loss
Hmm.
and target. So here we can use
Yeah,
stop loss
this
in percentage.
minus 5% and target plus 10%.
Yes.
That you can do from, yeah, that madam is asking na that how can
Yes.
you,
So
how can she do
Monica, this
this?
is the answer to your question. You can place all the orders immediately, but this is not available for intraday. It is available only for long term. You can place
Long term,
stop loss,
and
you
that is
can
good.
place target, but it is in percentages. So if you have suppose specific level, you can calculate that level, you can calculate the percentage, and you can enter that percentage here. Like suppose minus 10.11%. You can enter order like this also. Okay.
Support level and resistance level.
Yes. So at a
And sir,
time you
support
can
level
place
how,
GTT stop loss, GTT target, and you can buy. This is possible.
and sir, on tab reading tool.
Yes.
Hello.
Yes. Yeah, who is asking question? So Ramakrishna sir, next session, see there is some issue with the website. If that issue is resolved, then we'll go from website. Otherwise, we'll continue on the Zoom. Yes, someone wanted to ask a question. Okay, if there is no question, we can end the session here. Thank you. Yeah, thank you, ma'am.
Hello.